Good morning. It is Wednesday, October 5th, 7:34 a.m. pre-New York, here to do my Trade Ideas webinar. We're going to start with the economic calendar here, see what happened overnight and what type of data we're waiting for in this session, and what kind of an impact can it have here. So overnight we had the Euro PMI data right here. 48.1 and 48.8. They were actually lower than the forecast and lower than previous as well. And typically below 50 is really bad numbers for PMI. So we know Euro has been really bad in terms of the recession, and their economy has been weak, and further data showing the weakness here. So this is weak on the Euro. The GBP PMI and services PMI also came out a little bit better here, as we have better than forecast, but we're still below the previous numbers. So this is still showing a shrinking economy and showing recession in the pound economy, slightly better than the Euro, but still recessionary. So looking forward to the New York session, we have the ADP non-farm employment change, expecting increase, right? So we know this week is the jobs week. So Friday is it's going to be the big day in terms of economic data, where we're coming out with the non-farm payrolls data and the unemployment data in the U.S. Economy. And the ADP is sort of going to be foreshadowing what we potentially can see on Friday. So I'm not expecting a huge significant impact in the ADP, because the more important data is going to be on Friday in terms of the jobs added and all these things related to the employment and the jobs, the labor market. So yeah, it might have a short-term impact if it's really high or really low. But overall, investors are going to be waiting for Friday for a better idea about the labor market. But we also have, more importantly, PMI, composite PMI, services PMI, and ISM non-manufacturing employment and PMI at 9:45 and 10 o'clock here. So this is going to be important data for the US dollar, where if we have really good data across the board here on the PMI, that would show the economy is in a good place, quote unquote, good place. A stronger economy means that the Fed, in its mandate to bring inflation down, can be more aggressive in the rate hikes. So good data here is actually negative for our asset classes, because good data means higher rate hikes. And higher rate hikes mean lower inflation. Lower inflation means the asset prices are going down, right? So that's basically by definition here. So good data is going to be bad for our asset classes, and it's going to be good for our macro information advantage, as we have a bearish bias on overall bias on our asset classes. So good data is good for our macro bias. Bad data is the opposite. Bad data would mean that the economy is fragile. The bad data would mean that the Fed cannot be as aggressive. So investors are going to price in lower interest rates, or a less hawkish Fed, potentially having a pivot, the chances of a pivot growing. So this is actually positive. So bad news here would be positive for our asset classes, right? So let's look at the US dollar, the DXY here. So obviously we are still within a higher time frame bullish bias, as the US dollar domination is still active, as the Federal Reserve is raising interest rates, right? So we know, we have seen that the US dollar has printed significant higher highs on the higher time frame here, around 114.4, before rejecting our weekly key level here and entering this pullback zone, this pullback phase. with consecutive lower lows, lower highs, lower lows, lower highs, into new lower lows. So from these lows, we've retested previous levels of liquidity here, namely this liquidity zone that led into this new higher high. We've retested this here, and we've had this bounce coming from that zone. Now, this is not enough for me to say that the US dollar bulls are back into play. Why? Because we are still below this previous low on the 4-hour. So far, the US dollar is coming from new 4-hour lows, new intraday lows. So this is not a bullish indication. This is only a pullback within this bearish structure on the US dollar. So I'm not going to say that the US dollar bulls are back into play unless we have more sequence of events that show that the buyers are actually in control. And what I would need to see for buyers into control, either breaking back above this previous low and starting to create higher lows and higher highs, then we could see with more certainty that we are coming back to retest the highs here. But so far, we are just in pullback. As long as we stay below 111.5, we can easily just be grabbing more sell side orders to continue the way down. Whereas once we come back to the downside, even if we come back to the downside and form a double bottom here now, this is a lot better indication of seller exhaustion and buyers stepping back into the scene here. So I would even prefer this as a bullish confirmation. If not, we can just continue on the sell side and continue a deeper pullback. This is possible as well. So far in the US dollar, we see that the buyers are stepping in right now, but this is more so a pullback from the 4-hour bearish trend, as opposed to a continuation of the higher time frame trend. So it's a important distinction here. Going on to the equity markets here. So the VIX is still near these lows. It's holding above this weekly key level. But again, let's look at this. We are still maintaining this bullish structure here from these new highs correlating with the new lows on the stock market here. These new highs are pulling back, where we're having a little bit more weakness in the VIX here, but we're still maintaining previous bullish structure. But this weakness in the VIX is correlating with more buyers in the stock market, as we've had this double bottom, failure to break, some profit taking near the lows of 28,750, and new intraday higher highs with consecutive bullish candles, buyers stepping in the scene, sellers taking profit at significant low prices, and we actually have a clean break of structure back above this weekly key level. And from these new intraday highs, we are seeing a slight pullback, but this is nothing compared to the entire move that we see here, right? So this is just a fraction of this entire bullish move. So even if we come down a little bit deeper and retest these key levels, I'm still expecting bulls to come in and that this overall pullback structure to continue, whereas I'll be waiting for potential better setups to re-enter onto the sell side and to the overall bias here. But I'm going to need to see more signs of exhaustion here by the buyers. Right now, I don't see exhaustion by the buyers. Buyers have just printed a new higher high, taking a little bit of a pause during this pullback. But it's very common to see with this sort of pattern here in the strength that's significant lows, that we're going to see a continuation of this bullish move here. So based on the US dollar chart and the equities here, we are still within bearish pullback structure, so we're still optimistic in sentiment, right? We see our equities across the board here. The US equities, US 30, US 500, US 100, all lower, about 80 to 90 basis points in the red. UK 100, the UK stock index is also down around 60 basis points. DAX is down as well. Australian dollar is down. The Australian markets are down. Only the Chinese index is actually up big time, around 6%. But yeah, so overall, we're having a slight dip here, but this is not correcting the big gains from yesterday. This is a slight pullback from the big gains yesterday. So the optimistic sentiment is still holding, whereas this pullback in the dollar, the bulls from London session are showing as we are having a dip in the equity. So it's making sense. It's correlating here. US dollar, as we can see, is stronger across the board against the yen, slightly stronger, but against the pound, the euro, the Canadian dollar, and the Australian dollar, it's significantly stronger. So US dollar is the strongest currency in this session so far. The yen as well is pretty strong. It's only lower against the US dollar, but it's also higher against the pound, euro, CAD, and the Australian dollar. And the pound is the weakest currency right now. The pound is the weakest currency and is lower across all of its peer currencies here. So it makes sense. We're correlating that across the board with the optimistic sentiment holding, but a slight pullback. And this is nothing's changed with the if we're looking at gold, we are still maintaining this bullish sequence of events, but we are having a slight pullback here. If we're looking at the daily time frame, here, yesterday we've had we were playing the optimistic sentiment here as we were breaking new highs from this bearish sequence of events, created this lower low, and then we were breaking above this previous high, and we're seeing with the momentum in the market, we had a high chance of reaching this next zone here around 1727, and we got that. Now, it is very, very, I'm not surprised that we're getting a reaction here, because this is the most recent level here where we had previous lows break, previous lower highs, so sellers stepping in the markets at this price, pushing into these new lower lows. So this is a significant level of supply in the market where a lot of sellers were here pushing these markets down. So there's a lot of sell side liquidity, sell side volume in this level, and we are getting that reaction from the zone. However, this small downside is nothing compared to this upside. This is, again, not even a 50% correction. Right, so technically speaking, we can still potentially get some sells and some further downside into this previous zone, this previous sell side zone that could end up becoming some buy side liquidity and have a continuation into this pullback where we could potentially have better opportunities for sells here, or we are going to break and continue this upside to potentially better sell side zones. But this is a significant level. As I said, this pullback is not significant enough to show that the sellers are back into play. I'm going to need to see more exhaustion to take any sells. As I'm still bullish bias on the short term, as we're just having a small pullback. Now on the 4-hour, we see that we are still bullish. So we're bullish on the daily time frame. We're bullish on the 4-hour time frame. And we've got, this is the previous level of, this is where I'm going to be looking for a potential bounce. Right, on the daily time frame, we see that these are the previous wicks, previous lows. So on the daily time frame, this is the higher time frame potential zone that we can see a bounce from. Right now we're in the middle of the range. The 4-hour is pulling back. We've got 4 consecutive bearish candles here on the 4-hour, but again, this is not canceling out this bullish move. So we're pulling back on the 4-hour because we're still bullish above these key levels. And on the 1 hour, we are now we're now printing some bearish structure here as we created this low, failed to break higher, actually create another lower low, lower high. So I'm going to mark this out as a 60-minute, 1 hour break of structure here, as we see that we had bullish sequence of events after a bearish sequence of events after double top around our daily break of structure key level 1727.85 before selling off here. So there's no trade ideas for me because I don't have the confluence of the 4 hour time frame. I would wait for a potential dip into the next zone to take buys from the bottom of the zone, or if we come back up, then take some sells from the top of the zone here. But right in the middle of the range here is not ideal for some trades. So I'm going to wait for gold to, again, get on one side of the range or the other. So no trade that I see right now unless we get back to the sell side zone or the buy side zone near the bottom of the range here. On GU, GU is going to be very similar. As let's go to the daily time frame here. As we're digging into, on the higher time frames, this previous lows here, that was the daily break of structure, right? So we had this low, printed, lower high, retesting previous lows here, and then a significant, strong new lower low. So even with the pullback, we are just retesting this previous level of liquidity, and we're having the same sort of reaction here, aligned with the investor sentiment analysis. However, so the daily time frame is still bearish, but the 4 hour is bullish here. So the 4 hour time frame is still bullish, even though we're having this four candles of bearish price action. We're still bullish overall above these previous highs here. All right, still bullish on the 4 hour time frame. Now on the 1 hour time frame, we are coming into this potential demand zone right here, this 1 hour demand zone that printed these new higher highs. I'm not going to be looking for buys here. The same reason why I wasn't looking for buys here yesterday is because we are still below this significant level of resistance, and you see right now that we are having a lot of seller strength come into the market, so we can easily dip a little bit lower and even test this zone here, where we could end up getting some buys from 1.1235 area before potentially testing these areas again for another sell. But I'm not going to get too ahead of myself. Today for this session, I'm not going to be looking for any trades just because I'm getting mixed signals on market structure and trend. So to recap, the market structure on the pound US dollar, on the daily time frame and on the weekly time frame, we are still holding bearish structure. However, on the 4 hour, we are bullish. And on the 1 hour, we are bearish here. So I always align myself at least with the 4 hour time frame here. So for me to take some sells, I would need this 4 hour to exhaust. I want to see more signs of seller strength, buyer exhaustion, and potentially a shift in market structure before being convinced that GU is going to take the downside. So that's it. I'm not looking for any trades today for those reasons. I believe that there's better opportunities going to come once we see a little bit more one-sided volatility instead of this mixed sentiment.